Good afternoon and welcome to the February 19, 2026 regular meeting. Mic on.
Red button.
Sorry. Good afternoon, everyone, on a rainy afternoon, and welcome to the February 19, 2026 regular meeting of the Finance and Risk Management Committee, FRMC. I am Dita Siamani, Chair of the FRMC representing the City of National City. We welcome members of the public, community power staff, and committee members joining us in person at the City of Chula Vista Council chambers. We now call the meeting to order. Sandra, please call the roll.
Director Insunza,
I'm here.
Vice Chair Suzuki,
Present.
Chair Yamani.
Here.
We have a quorum, Madam Chair.
Thank you, Madam Secretary. Let us all stand up and turn our face to the flag for the Pledge of Allegiance led by Vice Chair Suzuki.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you, ma'am.
Thank you.
Next, we acknowledge that this meeting is taking place on the land of the original inhabitants of the Greater San Diego region. A land acknowledgement is a critical step toward working with Native communities to create meaningful partnerships and inclusion in the stewardship and protection of their cultural resources and homelands. Let's take a moment to honor these ancestral grounds that were the traditional lands of the Kumeyaay. Thank you. Madam Secretary, are there any items to be added, withdrawn, or reordered on the agenda?
There are none, Madam Chair.
Thank you. We are going to our non-agenda public comment. We will now take up non-agenda public comments. Any written public comments submitted before the FRMC meeting were emailed to committee members prior to the meeting and will be posted on the website. Sandra, do we have any non-agenda public comments, ma'am?
We do, Madam Chair. A member of the public wishes to speak. Mr. Rock, please approach the podium, and you have 3 minutes.
Yeah, I could hear myself, so that's kind of what I was checking. San Diego Power, what is it? Community Power. There we go. I like to try to say it correct the first time when I'm starting my public comment. Yeah, so I live in Chula Vista. I'm a ratepayer to San Diego Community Power. We have Tesla. We have solar panels, batteries. You know, the time when we bought it, it was a lot more affordable than it is now. And it was right before 2020. And so like I got it for like, I don't know, 30,000. And it was 2 batteries, and you know, it's a nice system. Recently, the power has been going out more frequently in Chula Vista in comparison to other years. It affects other residents more than myself because, like I said, I have batteries and stuff to get me through. But that also doesn't mean we want huge battery storage facilities in the middle of residential areas. I mean, we can all just like kind of point that out. I'm here to show support, but we want the rates to be looked at more. I know you guys have a big savings coming into effect this year. Been covering other of your meetings. I'm trying to broadcast that, but I need your help. You know, I need you guys to also reach out and put out some good information for the public to hear. And instead of opinions, we can just hear it directly from, you know, the people who know it best. And, you know, like I said, I'm here to just check that public comment is welcomed. But I'm also here to share your guys' meeting with the public. So I just look, time's up. So that's my thing. Other meetings don't have timers, and I love Chula Vista because we do. You know, I think it was 3 minutes. Is that right? You know, the public really only gets 3 minutes, and sometimes we don't say everything. We want to come back up, and I just hope this board never reduces the time and sticks with just giving us our little bit. You know, we just want to be heard most of the time. Even if we get off topic a little bit, it's not on purpose. Sometimes we're just so in the moment, and you know, like I said, I'm glad everybody showed up today. Zenza, we're here to share work to everybody, and I appreciate you. National City, I'd go off on everybody. I appreciate all of you. These are just my local people that I come to the most, so thank you.
Thank you, sir. We will now move on to the consent calendar. Consent calendar 1, approve December 4, 2025 meeting minutes. And 2, recommend appointment of Jeff Spengler as San Diego Community Power's interim treasurer.
Motion approved.
Do any of the members wish to pull any of the consent items? Sandra, do we have any public comment?
There are none, Madam Chair.
Directors, do you have any comment?
Motion approved.
Motion approved. I have a
Second.
motion. I have a second. Seeing no other comments. Madam Secretary, please call the roll.
Director Insunza,
Yes.
Vice Chair Suzuki,
Aye.
Chair Yamani,
Aye.
motion carries, Madam Chair.
Thank you. Thank you, Madam Secretary. We will now move on to our regular agenda items. We'll now go to item 3, Treasurer's Report for period ending November 30, 2025. Mr. Jeff Spengler, Senior Strategic Finance Manager, will present this item. Before that, Sandra, do we have any public comment on the item?
We do not, Madam Chair.
Okay, Mr. Spengler, it's your floor, sir.
Great. Thank you very much. Can you hear me okay?
Yes, sir. How's Oregon?
Oregon is great. I'm sorry I can't be in Chula Vista today, but thank you.
Hey, sir.
It's actually snowing quite a bit right now, so it's actually nice to be inside.
Thank you.
But thank you, Chair Yamani, members of the committee. Jeb Spengler, Senior Strategic Finance Manager at Community Power. Happy to report the Treasurer's Report for the period ending November 30th, 2025. And I know I discussed this in our board briefings, our member briefings earlier this week, but just wanted to give you a heads up that some of these slides are a little different from previous Treasurer's Report presentations. And I think what we're trying to do is be a little bit more transparent with some of the key metrics that we think you would be most interested in as part of the Finance and Risk Management Committee. So with that, I'll just dive right in. This first page is for the first 5 months of fiscal year 26. Results are generally tracking favorably compared to budget. Operating revenues are 1.1% below budget, while operating expenses are 10% below budget. Year-to-date totals result in a 170.4 change in net position. So versus the adopted budget, the main headline is lower expenses are more than offsetting the modest revenue variance. Next slide, please. This slide shows our monthly operating income to the budgeted net position profile across the first 5 months. As you can see, actual operating results are generally coming in ahead of the budget for each of the first 5 months of the fiscal year. Next slide, please. This is our new rolling 12-month days cash on hand reserve picture. This shows how our reserves have been trending over time. Kind of the key point here is reserves are being managed against our new defined reserve policy thresholds, which is the minimum 180 days cash on hand, the target, which is 225 days cash on hand, and the maximum, which is the 270 days cash on hand. As you can see, we are now above the minimum and still just slightly below the target of 225 days. Next slide. Under our recently updated financial reserves policy, we now define reserves as unrestricted cash, cash equivalents, and investments that are unencumbered and not earmarked for specific purposes. As of the end of November, total cash and investments were $562.5 million. We also have $227.5 million of available capacity on our letter of credit. Breaking out the specific cash and investment mix at the end of the month, $460.4 million was held in unrestricted cash, 3.7 million was in current investments and 98.4 in non-current investments. And non-current investments are generally investments that are 1 to 5 years in highly liquid, high investment grade liquid securities. Bottom line, strong liquidity with both cash and investments and credit support. Next slide, please. This is a new slide showing our investment income. Investment income has ramped up steadily over the first 5 months of the fiscal year. Accumulated investment income has grown to 6.52 million through November. Monthly investment income in November was 3.51 million specifically. This reflects higher balances, reserve balances, as well as a positive rate environment, supporting overall financial performance. Next slide, please. We're going to start showing quarterly prepay bond savings for you all. This slide summarizes quarterly savings for the first 2 prepay transactions that we've accomplished, the 2024F and the 2025D. Just through, which is now calendar year 2025, for the full calendar year, we saved $6.1 million through the prepay bond program savings. This is incremental value directly tied to the program structure and just important proof point as we discuss the future transaction in just a few moments. Next slide, please. And finally, overall customer participation remains strong across the jurisdictions with approximately 95.5% participation rate overall. And with that concludes my presentation on the November Treasurer's Report.
Thank you, Mr. Spangler. Congratulations also for being our interim treasurer. Directors, do you have any comment on the presentation? This is a receive and file treasurer's report.
We need a motion, Madam Chair.
Yes, I'm just asking them if they have any questions. Otherwise, if none, I need a motion.
Is this, do you need a motion to accept?
We do not need a motion, sorry.
It's just file
Yeah,
itself.
receive and file. Okay.
I just
Well-
want to thank Mr. Spangler for the report and also to thank him for stepping up as our interim.
Thank you.
Thank you, Jeff.
Thank you for the more transparency in the report, Mr. Spangler. Thank you. That's more color too. I like it. The graphing is very instinct. So
I like the visuals.
distinct. Thank you so much. So this is a file and a receive and file treasurer's report for period ending November 30th, 2025. Thank you, Mr. Spangler. Thank you so much. We are now moving to our item number 4, resolution authorizing execution of an energy prepayment transaction, related documents and form of documents subject to maximum issuance amount, limitation on fees, and minimum required savings. This again will be presented by Mr. Spangler, Strategic Finance Officer, Manager, and Mike Berwanger, Managing Director of PFM Financial Advisors, will present this item. Madam Secretary, do you have any public comment?
We do not, Madam Chair.
Thank you. Jeb and Mr. Mark.
Berwanger.
Mr. Mike Berwanger. Thank you, sir. Jeb, you open it?
Thank you, Chair Imani and members of the committee. Jeb Spangler, Senior Strategic Finance Manager with Community Power. And as you had mentioned, joined by Mike Berwanger, which represents Community Power as our municipal financial advisor, both on prepaid transactions as well as just outside matters relating to credit, et cetera. And Mike's always been a big help to Community Power as we've kind of navigated 2 transactions to date and now working on this 3rd one. So quick history on the prepay program. Diligence on prepay bonds began back in 2023 with Mr. Berwanger. And after a detailed review, we moved forward in 2024 with the 2024F transaction. We've now successfully closed 2 transactions, the 2024F and the 2025. Both transactions were just over $1 billion in total size. Each of the 2 transactions saved approximately $53 million for the 24 and 54 million for the 25 transaction. Those savings are spread out over a period of 7 to 10 years. And just given kind of the portfolio of the scale of our portfolio, our power portfolio, we still have capacity to do a number of multiple transactions over the coming years. So we're here today to bring over prepaid transaction number 3 with the hopes that you recommend approval to the board. Next slide, please. What we're showing here is just a table that provides some market context. So far, there have been 26 prepaid transactions to date since September 2021 across California CCAs. Just want to highlight that several agencies have repeat prepaid programs similar to what we are accomplishing here at Community Power. You'll notice CPA, AVA, Silicon Valley Clean Energy, PCE, and MCE have all had multiple issues over the past 5 years. Just the key message being, this is an established financing approach with a sizable peer set. Next slide, please. This slide summarizes our expected prepay savings for just the first two transactions that have already been executed. The prepay program that we are implementing produces measurable savings with multi-year savings stream. The market is currently in phenomenal shape, and I don't want to jinx it, but there have been several prepays that have occurred year to date. I think, at the high point here, we're looking at almost 15 million in annual savings a few years down the road. I think we're looking at potentially an additional 5 to 6 million on this upcoming transaction if things hold as they currently are. So that would be an additional $5 to $6 million in savings on top of these existing bars that you see here. Next slide, please. So this is the execution roadmap for prepay transaction number 3. In 2024, we ran an RFP process to select both the municipal advisor, various counterparties, outside counsel, and then we also joined Triple CFA as a member agency. In November 2025, staff engaged with Goldman Sachs as our counterparty for transaction number 3. And then just some key upcoming milestones for this particular transaction. We have both the FRMC meeting today. Next week, on the same day as our board meeting, we actually also present to Triple CFA. We need their approval to move forward as the conduit borrower for the transaction. If we receive approvals as early as February 26th, we could be in the market as early as the following week, which is the week of March 2nd. And if that were to happen, we would close the bond transaction in early March, and savings I say could tentatively begin in June 2026. It might actually be a month or two later than that, depending on various factors. But ultimately, savings would begin in 2026. Next slide, please. This slide just identifies the core financing and legal participants of the transaction. The majority of the participants are the same from past transactions, with the exception of the bond underwriter and electricity supplier for this transaction. This time it's Goldman Sachs and J. Aaron as the electricity supplier. We're once again being advised by PFM as our municipal financial advisor, and Triple CFA, California Community Choice Financing Authority. They act as the issuer of the bonds on behalf of Community Power. Next slide. And I don't mean to scare you. I know you have all seen this, and we did the walkthrough step-by-step process of this on the last transaction. So I'm going to keep this particular transaction overview to a high level. So at a high level, Triple CFA issues tax-exempt bonds and uses those proceeds, tax-exempt bond proceeds, to prepay for long-term energy deliveries. The bonds are issued as 30-year bonds with a repricing that occurs every approximately 7 to 12 years. And that depends on, the repricing period depends on taxable and tax-exempt market spread dynamics. Triple CFA prepays the energy supplier for 30 years of deliveries. And then ultimately SDCP buys delivered energy on a pay-as-you-go basis at an index price less a discount. So all that to say, due to taxable, tax-exempt market dynamics, we're able to purchase electricity at an index rate less a discount, which results in the $6 million savings that I just mentioned previously. And then finally, Community Power will assign various PPAs into this transaction structure over time as PPAs come online. If I go to the next slide, I'm going to turn it over to Mike for a few slides.
Sure. Thanks, Jeff. Good afternoon. So just, we wanted to talk a little bit about the risks and the mitigations that are built into the transaction to protect community power. I think the key item that Jeb has already discussed is, should the transaction terminate, you essentially revert back to where you sit today before you did the transaction. So really what that means is you will lose your savings, but your assigned contracts will come back to you. You'll be facing your counterparties directly. We've mitigated this by selecting, well-rated counterparties in the structure so that obviously we're not seeking to lose the savings that you're going to enjoy from a budget perspective in the future. A couple of the key ones, there are, a host of folks that you saw on that slide that are involved here. They all do get paid. They're not working for free, but they are all contingent on the successful closing of the bond sale. This has been well structured from the start. All of those transactions that you saw on that table earlier have been structured this way. So there's really minimal amount of out-of-pocket risk in terms of cost for Community Power. Really just the green bond designation and even the rating agency fees. We've waited to the last minute to engage them so that we can mitigate any risk there. I think the other large risk that I would discuss that's on this page is really just market timing, right? The savings really are dependent upon what's going on in the bond markets. I think your team will set targets and try to hit those targets and would only proceed if your minimums were being met. There's no need to proceed with anything that doesn't meet your objectives. And then finally, load loss, tax and regulatory risk. Again, this is all it's been well structured so that you're not exposing yourself in terms of load loss or, tax and regulatory risk. And we can flip to the next slide. Oh, there we go. A couple slides on the key documents that are in front of you for approval and will be in front of the larger board for approval. There is, I think that these are kind of in order of importance by design. So there's a clean energy purchase contract. This is between you and the CCCFA. This really is the primary document that governs, how the energy will be delivered and pricing and savings. The second document is the custodial agreement that will detail all of it's basically, you're hiring a custodian to deal with all of the cash flows, right? There's a lot of payments, a lot of money flowing around. We need a bank to do that. That's what this governs. And lastly, there is a form of a limited assignment agreement. So this is, your, assigning in your current and future power purchase agreements that you've negotiated into the prepay to meet your obligations within the structure. And we can flip to the next slide. These are really just kind of cleanup agreements, to be honest. These are all, good contracts make good partners. This is a long-term transaction. All of these really just sort of deal with administrative matters and just, lay of the land, rules of the road for how things will be governed, how operations will occur on an ongoing basis between, primarily between the CCCFA and Community Power. When we can flip to the next slide. And I think this is going back to you, Mr. Spengler.
Yes, thanks, Mike. So this slide contains the key authorizing parameters that are included within the resolution that we're asking for approval to move forward with. To just walk through them, the aggregate principal amount of the transaction will not exceed 1.25 billion. As you know, the last two transactions were just over 1 billion in total each. The minimum discount that we are looking to achieve is no less than 8% of fixed cash flows or an equivalent dollars per megawatt hour. Issuance costs will not exceed 1% of the bond proceeds issued. And then just an important governance note, the bonds are not obligations of Community Power specifically. And then finally, just the other attachment that's included within your packets and will be included in the board packet is Appendix A to the preliminary official statement. You'll see a snapshot of what the preliminary official statement looks like to the right. That's the investor offering document that goes to interested bond investors. As you'll notice, Triple CFA is the bond issuer for the prepay transaction. The Appendix A is specific to Community Power. It's included in the back in the appendix section of the preliminary official statement. It includes a lot of information about Community Power and is just an interesting read for folks that want to learn a little bit more about Community Power, the ins and outs of Community Power. And I urge you to kind of read through it and see if you have questions about anything that goes on in there. And with that, that concludes our presentation on prepay transaction number 3, and happy to answer any questions.
Thank you for this presentation. This is a recommendation. Are there any questions from my directors? No question. This is to recommend board adoption of resolution approving parameters under which an energy prepayment transaction can be completed, authorizing and approving documents or form of documents supporting the prepay transaction, and directing California Community Choice Financing Authority, CCCFA, to make payments to service providers for issuance costs from prepay bond proceeds.
Make a motion to recommend, I make a motion to adopt the resolution.
Thank you. I have a
Second.
motion. I have a second. Madam Secretary, can we call the roll, please?
Director Msunza,
Yes.
Vice Chair Suzuki,
Aye.
Chair Yamani,
Aye.
motion carries, Madam Chair.
Thank you so much. Moving on to item number 5, amendment of the FY 25-26 operating budget, the fiscal year 25-26 capital budget, the FY 2026 to 2030 capital investment plan. Tim Manglikmot, Director of Finance, and Chris Do, Senior Financial Analyst, will present this item. Madam Secretary, do we have any public comment?
We do not, Madam Chair.
We do not. Okay, it's your turn, Director.
Yeah, good afternoon, Chair Yamani, Vice Chair Suzuki, Director Nzuza. For the record, my name is Timothy Manglemot, Director of Finance, and I have the pleasure of co-presenting this item today with Christopher Do. And this item is an action item with a recommendation to recommend board approval of amendment to the FY 25-26 operating budget, capital budget, and FY 26 to 30 capital investment plan. So whenever we start a budget, kind of internally within finance, we do follow some internal finance principles. And I'll just take a quick moment just to thank staff, because anytime we actually prepare one of these budgets, it is a pretty heavy lift for the agency to do these budget amendments. But when we do a budget, we do try to practice fiscal responsibility. So reserves are a really close thing that we look at to make sure that we're in alignment with the reserve policy that was just adopted by the board in December of 2025. Customers are also central to the agency, especially as it relates to affordability. So we also do want to make sure that we have stable, competitive rates for the San Diego region. And then the capital investment plan is another kind of cornerstone for any of our budgets to make sure that we are delivering programs and projects for our customers for this year and years to come. In terms of budget timeline for the budget amendment, so the budget is typically adopted in June and implemented in July. Kind of what's typical with any budget season for Community Power is in January, the board did set rates retroactive to January 1st, 2026. So kind of following along that rate setting cycle, we always typically do a mid-year budget review and return back to the FRMC and to the board in February with a mid-year budget adjustment to kind of align with the rate setting action that was taken in January. Along those same lines, we do look really closely kind of at the full budget, especially the non-energy budget that's not included in rate setting, to make sure that we're aligning what's happening on the non-energy budget with what's happening kind of with rates and the rate environment for customers. So in terms of headlines for the budget amendment, kind of the two at the top are kind of headlines from last month. In terms of again, aligning the budget with the rate setting action from last month. So the budget includes a 4% discount to FCG&E for default power on products, a 10% discount to FCG&E for a power-based product. And those two things are baked into the revenue for the mid-year budget amendment. The thing that the board hasn't seen yet is the agency did take a really close look at the non-energy budget. So the non-energy budget really are the things that are under the direct control of Community Power. These are things like general administrative costs for office space, for example, or personnel costs for just staffing for the agency. We looked really closely at every single line item in our budget and are proposing a $4.3 million reduction into that non-energy budget. And then all in all, at the end of the fiscal year, this budget does project to end the fiscal year with 229 days cash on hand. This is significant because the board, again, adopted a reserve policy in December that kind of set a reserve goal of 225 days cash on hand with an upper range of 270 days cash on hand. So through this budget amendment, we do project to achieve that reserve target, actually December of 2025, and we expect that to be maintained throughout this year. So in terms of what's changing, you can kind of see the revenue, expense, and net position changes from the adopted budget in June to what we're proposing to move forward in February. Kind of the punchline with these changes are three kind of major things. The first is we're proposing a reduction to revenue. Again, this is to align with the rate setting action that was taken last month. We are proposing to increase the expense appropriation by $8.3 million. I did mention we are proposing to cut non-energy costs. But that 8.3 million increase is driven primarily by energy costs. Not to get into too much detail, but also in that December meeting, we talked about some of the market price benchmarks that are set by the CPUC. Two of those market price benchmarks that were set were for resource adequacy and renewable prices. And those market price benchmarks were a little higher than what we forecasted, which is kind of the main driver for that increase in energy costs for this mid-year budget review. So all in all, this budget is proposing a $32.5 million reduction in that position, but that still leaves us with about 229 days cash on hand and still achieving that reserve target. So kind of continuing to the slide that Jeb presented earlier. So Jeb's treasurer's report discussed achieving 203 days cash on hand as of the November 2025 treasury report. Again, we do project that we will achieve that 325 days cash on hand reserve goal in December of 2025. And then you can see the kind of the projection towards the end of the fiscal year where we expect to maintain that 325 days cash on hand all the way until June of 2025 or 2026. Okay, with that, Chair, I'll turn it over to Chris Do to walk us through the rest of the presentation.
Hello, Chair Ronnie and committee members, senior finance analyst at Community Power. My name is Christopher Do. I'm here to present the following slides. This slide here is a slightly different detail from what Sin presented earlier. This slide, I really want to highlight the $4.3 million in operational non-energy costs, as Tim mentioned before. It's a huge lift. It was a collaboration with all the departments and directors to meet this reduction to show that we were fiscally responsible, keeping ratepayers in mind. We also like to point out that there's a $0.3 million reduction in capital investment plan. So this is mostly due to a fixed fee contract we negotiated with our ERP that we presented in January. And also, it's not highlighted here, but if you can see in debt service, we did have a $0.4 million reduction as well. And that's because of reduced usage of line of credit. Now, drilling down to non-energy pieces in the operation budget, we have two major things I would like to point out here. This is a $1.2 million reduction in general administration. This is day-to-day costs. Fiscal responsibility, we're proposing to cut $1.2 million. We're to realize some savings for our ratepayers. Additionally, $1.5 million in professional services. This is due to the contract negotiations, and the majority of it, or the lion's share of it, comes from the Calpine contract negotiation, which is our data manager. Moving on to the next slide here, we are going to go into personnel. And so in this iteration of the budget amendment, we are asking for 9 additional FTEs. We want to highlight that 4 are cost recoverable. And overall, we're seeing a reduction in personnel costs. We're seeing a large reduction due to thoughtful hiring, but also due to the Section 218 agreement where Social Security taxes are exempt from our costs. So with the additional personnel, we want to benchmark this against some of our peers, NCE, AVA, and CPA. These are considered our peers due to the program size and similar load sizes. As you can see here, we were in line with personnel headcount to these peers. And this slide here is how we stack up to our peers budget-wise. Clean Power Alliance, or CPA, or CCA in north of us in Los Angeles, is the only other CCA that compares to us in size, as you can see from customer accounts and cost of energy. But we like to highlight that our non-energy costs compared to all of our CCAs are in line and even considered on the lower end of the range here. And that concludes my presentation.
All right, thank you, Mr. Doe, and thank you, Finance Director. I'm mumbling again. Sorry. This is a recommendation to recommend approval to the board of amendment of the fiscal year 25-26 operating budget, the fiscal year 25-26 capital budget, the fiscal year 26-30 capital investment plan. Are there any comments from my directors? No? If there are no comments, I would entertain a motion. I know we had a very good briefing from our staff, so and this will again be presented to the board on Thursday. So I would entertain a motion for recommendation.
Let's make a motion to recommend the amendment.
Thank you.
Second.
Thank you. I have a motion and a second. Madam Secretary, can you please call the roll?
Director Insunza,
Yes.
Vice Chair Suzuki,
Aye.
Chair Yamani,
Aye.
motion carries, Madam Chair.
Thank you so much. Are there any committee member announcements?
Good.
Okay, good.
A lot to say, but no.
So,
Happy Lunar New Year,
yeah.
right? So it's the year of the
Yeah.
fire horse. So I look forward to community power moving on into a great year and taking on challenges and growing more.
Rowing.
Growing and
Oh, I
rowing.
think some rowing.
And rowing, growing and rowing, going on.
Good exercise.
Our CEO said she's ready as a fire horse. Thank you. That brings us to the end of our agenda. I appreciate everyone's participation today. The next regular FRMC meeting will be held on Thursday, March 19, 2026 at 4 p.m. here at the Chula Vista Council Chambers. We are now adjourned. Council member, thank you for giving us this venue.